Okay, hi everyone. Welcome back to another podcast-ish style. So I think for those of you who have been long-time viewers of this channel, the last time I talked to Josh was around August last year.
Yes,
So
5 months.
yeah, so it's an honor again to have him back on the show because recently there was this new development that he put onto his YouTube channel. He started saying that he started buying into Chinese tech specifically. So maybe Josh, want to walk us through why now and what specifically is your strategy moving
I let you go first, so that's why
Okay.
you charge ahead and take down the enemy. Then when the enemy is weakened, then I come and round up the
Wow.
gold.
Okay.
Actually, I've been tracking this thing quite a bit, and my gut feeling, 5 months ago was it was a bit early. That was my gut feeling. Of course, on hindsight, we can see a bit clearer. But back at the point of time, I thought of holding back. I thought no rush, because things when they turn south, they tend to burn for a while. Imagine a fire. After you cool it, there's still gonna be heat. So I don't like that. I typically, from experience, prefer to wait and see if it burns out a bit further first. But of course, we cannot keep waiting also. Investing is about taking action. And if we believe a sector doesn't become zero, then the next step is to find the right time to start. So that's why I made some moves really.
So what was the inflection point in
Inflection
your
point.
opinion? Yeah.
Really is a sensing on the market. Because if you hear and see comments, do you also feel that many are turning too bearish on your channel? Some of the comments there.
They turn quite. I think specifically, I only can speak for Alibaba bulls because I have a lot of bulls here. But of course, there are bears as well.
On a neutral platform, maybe you'd see the bears are getting very loud. They kind of are mocking at Alibaba bulls.
Right.
Kind of. I mean, there's no quantitative number to things.
Right.
And after you've gone through a while, you kind of reach that point of pessimism. So it's a very point of view kind of thing. And I think now is the time where it's pessimistic.
Right. I think bulls are also getting a little bit tired.
Yes.
The funny thing is, when it break 200, nobody thought it will go below 180. 180, nobody thought it will go 150. 150, nobody thought it will go 120. And the market never fails to surprise. It went to 108 at its lowest point.
Exactly.
So in this case, right, I think it's really that sensing that different people have different sensing, right? Some people felt that even at 200, it was cheap already, but low can always go lower in this case. So maybe to talk specifically more about your own strategy, so the $1,000 a month, the $1,000 per week thing, you can walk us through how you develop that particular way of buying.
Okay, maybe I try to point everybody to a common direction first. I think that helps explain things a little bit better. When we invest, we want to get returns, correct? Whether it's for your own retirement or your own family's financial future, we all want to get returns.
Right.
And if that's true, then the next question is whether we pick Alibaba or we pick Tencent, really doesn't matter. As a whole, they have seen this risk. As a whole, the opportunity is roughly the same from a very far picture. You imagine that. So my approach is really how to get returns with the most amount of certainty. So that's really my approach. So we believe the sector is good. That's one. You need to research on sector. You need to have the right understanding of the risk. Then the next part is really to find an approach to attack the sector. And that's why first method was to be diversified. Buy the whole Chinese tech. Whether it's Alibaba or Tencent, really doesn't matter. They're all depressed. It's hard to argue that one is more than the other. It's very subjective. But as a whole, they are all depressed. So rather than picking one, I went with the broad-based approach, which means you buy a fund or you buy ETF. Then the second part is, in terms of the timing, in a bear market, it's been proven that it's very hard to catch a bottom, correct?
Right.
Low gets lower. And the saying that markets tend to get irrational longer than you can stay solvent.
Right.
This is very true. And again, this is a good reflecting point because this has dragged on way longer than what we all expected 1 year ago. But then the thing is, 1 year forward, what will it look like? Will this still drag on? If the answer is not sure, then have a process to buy gradually rather than to pump in big amounts. We are not like Charlie Munger. Charlie Munger has his constraints. He needs to deploy big capital. He needs to report. So there's a lot of things that we don't need to handle as small investors. We can automate systems. We can buy small amounts that nobody knows of. So we have that we have that luxury of buying slow and steady. And that's why I chose the approach 1,000 a week for 50 weeks. So that covers 2022 already.
Right.
If we hit a bottom, then good. Maybe I'll find something there. Or if I get it wrong, then maybe the approach really reinforces slow and steady.
Okay. So in terms of just to pick your brain a little and to really understand this approach, right? So if you buy for 52 weeks, that means that you already have $52,000 in capital that you wish to deploy. So you buy 1,000 a week. Then what would so I believe you started this system back in December, if I'm not wrong.
Couple weeks back, yes, correct.
Yeah, in December, right? So I would believe 40-odd thousand would be sitting probably in a high interest savings account, if I'm not wrong, right? So in this case, when you're trying to buy, right, if it hits the bottom here, then congratulations, you'll be buying upwards. So your average will be averaging up. But if it doesn't, if it drops to 100, even 80 or downwards, then you'll be averaging down as well. So in this approach, right, like you said, we can't really time the bottom. But maybe just to point you there's one CNBC article that actually talked about why lump sum investing is actually a better option than dollar cost averaging. So what is actually your thought on this idea?
That research, I think, was to really reinforce the point of time in the market, correct? Which means the longer you stay inside, the longer you get a compounding benefit.
Right.
Now imagine this, most of the market, or most of the time, general market is on the uptrend. They have proven before 70% is on the up, 30% is on the down, which means that if you average, more often than not, you are averaging upwards. Correct? Because 70% is going upwards. So you are averaging upwards, which means you buy lump sum now, you tend to benefit, statistically speaking. But actually, you think about it, this case is a bit different. We're making a sector bet that is bearish, which means, it's not necessarily going up in the next few months. So we don't know.
Okay.
So the thing is, for that case, lump sum, you might run into a problem whereby you bought and it goes lower. And the emotional factor is a hurdle that we all need to overcome.
Right.
You buy lump sum. So my thinking and my approach is we go regular, small and steady amounts, don't touch it, and really automate it to remove all emotions to fight this bear market in a lot of ways.
Right. I think the other time, at least on the YouTube space itself, there was this discussion between you and another creator. Not going to name names, but I think just to catch people up, that people that have not been following this entire developments of this situation. I think this entire idea of conviction, right? The interesting thing here is, for a lot of people out there, like retail investors, people are afraid of the Chinese big tech. So a lot of people sold out, especially at the highs. Maybe they bought in at 200, then it went to 180, 175. They threw it away. And a lot of people, after being scarred by that incident, right, they wouldn't even bother about looking into what Chinese tech. There's so many other opportunities out there. Why bother? So in this case, you are really a very unique and very interesting example where you're sitting on the sidelines. You're looking at it like a hawk. And then once you think that the entire situation is okay, then you start dollar cost averaging in, right? Then comes to this specific idea where how do you build this conviction, or why are you making this specific sector bet in this case?
Conviction, we need to really dissect it a bit more, because conviction is easy to throw out, right? Oh, I'm convinced on this. I have strong conviction, but conviction you need time to build. You have conviction on Alibaba because you've done a lot of research. Make sense? Yeah. Where a general viewer who takes third-hand information will not have that conviction. That conviction needs to go through some fires of tests, if that's the right phrase to use.
Right.
Now, I always believed in what they're doing in China. So that's one on the business side. The problem is the valuation as well as the sentiment. And if I were to convince myself wrongly that, I'm convinced based on the business, then I would naturally be throwing amounts way earlier. I was thinking now only the business works, the valuation definitely is distressed. Previously, it was arguable.
Yeah.
So now I see being distressed, sentiment being distressed, and that's why taking action is the next thing to do.
Okay, understand. So in terms of this discussion, right, do you have anything you want to talk about specifically in terms of this conviction idea? Because maybe just to outline a little bit on how I approach this entire investing thing, right, in Alibaba. Personally, I do adopt a more My way or my logic is really when I calculate, I understand the business a little bit more, and then I come up with a certain value or intrinsic value or valuation. And once I peg that X dollar, I have to constantly come back to review that number after quarter. And from there on, then you start looking at the valuation or what's your margin of safety, what you think you're comfortable with, and then start to extrapolate the prices and how you enter in terms of the tranches as well.
Actually, that's traditional investing method when you buy a particular company.
Right.
That is correct. That is correct.
Right. But the problem now is because we are in a very interesting bear market in a bull market, right? So this approach really works against your favor because in this case, nobody really cares what valuation we're talking about.
Yes.
As long as it's Chinese related, it's down. You have to go down, right?
Exactly. So back to the point of conviction, right? You see, if you were to ask me, I have more conviction in Alibaba or the entire Chinese sector, I think it's quite easy for me to say it's probably the latter.
Right.
Without understanding too much in terms of business model. It's just that as a sector, it doesn't become zero. I think that's foolish if we were to assume that you all crash, you all get nationalized and we all lose everything. I think that's really fearing the sky is crashing now. So to increase conviction, you broaden out your approach, which means you don't buy a company, you buy the entire sector, JD, Meituan, let it be inside.
Yes.
And the whole game is really to buy distress and buy broad base so that you can sleep well. You know it won't become zero regardless. And then have the right approach of accumulating.
Okay.
And the good part about systemizing it is we don't look at the number. You know, when you have a certain level, like you want to buy in at 150, 130, then we have to enter the market. We have to look at the numbers. Whereas if you systemize an approach, you let the system buy in for you. You don't really track that number. You can't remove yourself from the equation. And I think some distance handling a bear market is very useful.
I think actually I totally agree with what you say though. This emotional write down, right? I think I still remember back in August, you were talking about what was my last entry point and stuff, right? The funny thing is I was affected by my emotions because I told you I was buying 10, 10, 10, right? So I think it was the 170, 160, and 150. When it started plunging down, I actually held back from buying. And then my system essentially collapsed. But in hindsight, it's lucky because I then had more money to buy when it went to 120. Of course, I didn't catch the bottom of 110, but the lowest I got in was around 119. As of now, for today. I don't know whether
to add on further, right? You see, once we have that approach, it goes by level. If it springs up, very easily we'll start throwing in. We'll think that it's daylight already.
Right.
And if you study bear markets, you realize that there are a lot of false dawns. Or the sun suddenly shines a bit brighter, but then it goes dark again. So we got to anticipate that if we want to really buy into a bear market or start to accumulate things that are distressed. Because distressed investing is different from broad-based uptrend kind of investing. So distressed investing, you really have to prepare for the worst. And just in case it goes up Alibaba to 150 and it comes down again to 100, you are ready.
Right.
Yeah. So in that sense, systemizing it removes you from the decision of buying, and you buy over a pre-planned time frame. So if it's cheap, on the whole, it's going to be cheap, whether it's 100 or 150, correct? If the intrinsic value is 300, whether you buy it 100, 150, it doesn't really matter. Yeah. Let the system pick it up and don't touch it. So that's the other discipline.
Right. I think that's actually very great advice, specifically for people that can't really control themselves when they go into their brokerage app and get affected by the prices.
Bear markets are very hard to fight. I think once you've been through one, you kind of understand, it's harder than it seems.
Right.
On paper, we are all okay. We do paper trading, or that's the plan. And what Mike Tyson said before, you have a plan until you get punched in the mouth. I think that's very applicable. Once you get punched, we start to question our approach. We start to micromanage it. Then the game plan goes haywire already in that sense.
Okay. So actually, I think this entire idea, at the end of the day, in the investing world, there are a lot of different approaches, and there really isn't necessarily a best investment style or a best investment philosophy, just ones that work with you and that you can sleep at night. So as long as you know what you're doing and it's comfortable with your own temperament, with your own personality, right? I think that's the best investment style for yourself. So maybe just to end off, right? Very interesting, this experiment. I hope that you continue buying in 2022. We can compare our results at the end of 2022 because currently I'm also sitting at around 50 odd. 50 odd grand, but I have already deployed finish. So we can, and my average price for Alibaba currently is around 150, 149, 150. So in this case, but okay, it's a little bit different because you bought into an index. I bought into a specific company. So, but I can still do the calculation on Excel to see whether if now, let's say I have fully entered the position and compared to 1,000 per week in time to come, and in 2023.
And the beautiful part about it is, I don't need to waste effort in tracking and making that decision. You really pre-plan it and automate the execution.
Right.
So that really is a very simplified process that I believe any retail investor can do also.
Right.
You don't need to research the company too deeply. As long as you understand market cycles, you understand fear and greed on a general perspective. This is a very easy to execute approach.
Yeah, I cannot deny that, by the way. I think Josh is trying to up his cheat, saying that the time you spend is also additional.
That one definitely I win it.
Yeah, he wins. Exactly.
But maybe the returns are a bit lower, but that's fine also in that sense.
Right. So maybe we can have this, we pick up this conversation again in 2023 and we can compare the results thereafter.
Yes.
So yeah, I hope you guys enjoyed this conversation and a little bit more about DCAing and lump sum investing and how Josh himself is doing his own investment in Chinese tech in today's context.
Yes.
So yeah, extremely thankful for having this collaboration opportunity again. We can check in again. And with that, I'll see you in the next video. More importantly, I'll see you on the moon. Goodbye.
Bye-bye.